Good afternoon. Today is Tuesday, January 24th for the blog video here. Hope you enjoy it. I do apologize for not getting a video out yesterday, Monday. As you recall, I did get one out on Friday. Let's go through what I went through with you on Friday and give you two trades that unfortunately occurred this morning, but they were perfect setups. I just want to show you the setups so you can look for these by yourself, as well as me trying to spoon feed you these each day. So I'm going to look at these. I'm going to do some day trading probably tomorrow or Thursday. I will do some live trades in front of you with the E-mini S&P 500. And if we get any trades on the T-bond futures, I love to day trade the T-bond futures, crude oil. But as you all know, the E-mini S&P 500 market is my main market. But right now we're going to focus in on some swing trading, okay, short-term swing trades. As you recall, on Friday I mentioned, and again, I've got a vertical horizontal line on Friday and what I was trying to show you the setup, okay? So on Friday I was telling you that if the market was able to take out the high, okay, again, market made a 52-week high here in the last few weeks. Market's pulled back. Again, these two moving averages represent the 50 simple moving average and 50 exponential moving average, okay? Because again, I get asked this question all the time: which is better, an exponential or a simple? One really isn't better than the other, but I do like to use two because it gives you more of a zone at times, okay? And on the bottom here you see the RSI, but not a normal RSI. It's a 2-bar RSI, so a very, very short-term RSI value. As you can see here, 2. Oversold, I have the green line is at 10, and the overbought is 90 and above. Okay? And I'll show you exactly how I use these in the trades that I'm going to point out to you. So the market's got to be in a strong uptrend, right? Market's got to pull back into at least touch one of the 250 moving averages, and I need to see at least a 2-bar RSI under 10 as it pulled back, okay? And so what I do is I want to wait for the market to touch it, and then I'm looking to buy above the high, okay? So on Friday, so even on Thursday we touched both moving averages. If the market had taken out that high on Friday, that would have been a buy. Friday, we had a lower high. Great. Try to buy it on Monday. Monday made a lower, okay, a lower high, but then opened up today. So actually that voids the trade. We have one entire bar trading below both moving averages, so that was a trade that did not occur. STT, on the other hand, perfect trade setup. Okay, so right here on Friday, the 20th, we were looking to buy above the high on Monday, which this was Monday. Okay, so Monday is still in these two moving averages, right? The lower is lower than the Fridays, and the high is lower than Fridays. So it gave me a lower high and a lower low, which meant since that high was either at the lower moving average, between both moving averages, that's still a great trade. So even if today had made a lower high and a lower low, but the high was still minimum at this lower moving average, then tomorrow I would be looking to buy above that high. Okay, so today gave a great trade setup at 79, 21, or 26. Either 5 cents over the high or 10 cents. It really doesn't matter. Okay, so this is one trade that I am in right now. Great trade. Okay, PBA actually came into my watch list. Made a high. We've pulled back. As you can see on Monday, we pull back into the moving averages, right? So what are we looking to do today? We're looking to buy it above the high. Okay? Again, with a stop below the lower average, since the low is above that average. So this is our risk, initial risk. So on a trade like this where it's worked out immediately and we've got, look at this, we've got 5 cents or 10 cents above. It doesn't matter what you want to use, either or will work. 31.27. Right, 31.27 is the 5 cent penetration. It's at 31.88, so it's a good trade. So this one, regardless of what happens next, this is a break-even trade, okay? And quite frankly, we're targeting partial profits at a 1-to-1 ratio, right? So whatever you're risking here, okay, you want to be looking to make the same, minimum 1-to-1, preferably 2-to-1. But when you go 1-to-1 or at least 80% of a 1-to-1 risk to reward, you want to go to break even on the trade, okay? So PBA we're long, and WST set up beautifully as well, as you can see. Well, let's go back to PBA real quick. Look at this. Look at yesterday. Closed at 9.28, so it met our criteria. The 2-bar RSI closed below 10. We hit the moving average, right? One of the two moving averages, doesn't matter. In an established uptrend, you'll also notice that my bars are green, right? Bars are green denotes an uptrend. Okay, so beautiful setup. Looking to buy above that high. 31.22 is 30. Okay, well we went over to PBA 31.27. Let's go to WST. WST, beautiful setup. You're looking to buy it above the high of 83.79 to 83.84. 83.84 was the buy. We traveled as high as 84.66. So let's put a reward to risk on this trade. This is the buy. This is your initial stop. Okay. So again, between the two white horizontal moving averages is your R, which stands for risk. All right. So we're looking to make at least that amount. So whatever the difference between the two, extend up, roughly right in here. Okay. If the market can hit at least 80% of your first profit target, which again is the same distance between your entry and your stop loss, then you want to go to break even, okay? Hope that helps, and be sure to watch the videos that I'm putting out. I'm putting out a big series of videos this week, so be sure to watch those. If you've got any questions, let me know, and I will be back with you tomorrow for sure.